Hello, today is the 28th of February 2011. Welcome to today's Silver Log. And the first chart on the screen is what silver's been doing over the last so many months with a 50-day moving average. And it really doesn't matter if this is a 50-day, a 400 period, a 37-day, or a 64-day moving average, but based on the psychology of what it means when you have an event, when you are trading well above it as we were. And when I say well above it, every time we came down to support, it was obviously well above the key moving average. And then you come down, you find some support, resistance, break below it. When you get a situation when you've been in a nice bull run like we have been, and then you have this move where you go below it, but you don't find resistance here, and instead you proceed higher, then this becomes a massive failed move. And is it safe to say that it's had a fast move to the upside? I'd have to say at the smallest level, then yes, it has had that, because what happened here is this is where sellers were supposed to come into the market and at least move this market sideways, if not take it to the downside. They were unable to do it. There is right now too much bias going on to the upside to see stuff like this happening. Now let's talk about the exact same thing again. As I was saying within the 5-day moving average last week, that we were riding well above it, had some nice support at it, and here you broke below the 5-day moving average. However, just like before, what happens is it goes below that level, as you can see in here, and it doesn't find resistance at this key level here. Instead, it goes higher. There's not enough selling pressure right now to either make this market go sideways, which would be roughly around the 32 3/4 to 33 range, as well as making it go lower. So this should cause a failed move to a fast move. Either the failed move will be the break below here. I think the probability odds would state that's the best case. Thus, a fast move should make us really into new highs upwards to the 35 level. Or the failed move will be breaking above this 5-day moving average. If that's the case, the fast move would not only be a break below here, but a break below the previous low. So a lot of bullish sentiment coming in towards the market. And I often get asked, well, where's the market going to be next month, next year? And a lot of times you can just use the longer term time frames and state, well, hundreds does seem likely this year, but I also got to remember that the ones that are the makers, or the price makers, the one that are in control of the silver price, well, if they are able to keep it lower and they can do such a thing, well, that will be the case. Obviously, the lower the prices go with the physical disconnect of the bullion right now, would cause a lot of problem. People are right now asking for a pullback, seeing silver go even below 28 to 25. Some are even talking about wanting it to go to 21, 22. The problem with that is the physical market doesn't allow this to happen, because a lot of them want to do it so they can buy more silver. Well, the shortage is already bad enough as it is, by having APMEX and so many dealers forcing their prices to go lower. Then that just smells. It spells that they are going to be losing a lot of their physical inventory, and that would make the shortage lower. Basically, what I'm saying is it doesn't make any sense whatsoever on a fundamental level, based on the demand for people wanting investment grade silver, which are bullion coins, even for that matter, the 80 and 90% scrap coins, as an investment. More people are looking to buy than they are looking to sell. Generally speaking, that does bring higher price increases. So, just to finish up on this, we'll see what happens if this does become that of a failed move. If it is, the range that we are currently in is roughly between this 33 level to 34 34, maybe 34 and a third. We'll wait to see what happens at this upper band. I also made a second trend line right in here, and this is the exact same rate of difference from here to here. And if things get really good to the upside, then I'll have to do the same thing up towards here. So we'll just wait to this week and see what transpires. Moving on now to the daily chart, the uh, the the pattern, if you will, of this channel has been broken. I was stating that if the trend continues, we'd have a down day because you go up, down, up, down, up. What's the next one? The next one is down. But the trend has changed. It has been an up day, so this range for now has been broken. This could easily be a failed move. We could dip back into this range. However, a break of a trend line, at least this resistance one, means one of three things. It means a reversal from a downward trend. Markets continue to proceed higher. It can also mean that it would be a trap, which means we would not only enter this range, but most likely go to the bottom end of this range. Or it could just mean the rate of ascent or descent is slowing down, maybe that through a correction through time. Regardless of the fact, this is the day one of the break of this trend line. There's a lot of stuff stating that the sellers just cannot bring this market down. I think the benefit of the doubt right now, until proven guilty, does go towards the buyers. And because today is the 28th of February, it will be the final day of this month, and it's going to be a green candle. It's going to close close to or at its highs for the month. Very, very reassuring. And what I like about the analysis of the candlestick, I've already covered this in detail in the past, but you have this nice fall rally of 2010. But what I like about this is it's a three candle consolidation. Up move, down move, up move. But what I like about the final up move is it did make a significant higher high. Thus, the market really isn't all that overextended. It was starting to get overextended in here, but because we had the January down month, it isn't as overextended as it was before. Lots of room for potential upside because of this consolidation through time. And thank you for watching, and have yourself a magnificent week. Take care.